Welcome back. As we've been telling you, India is a bit of an outlier if you go by the SGX Nifty rate right now on the screen, because while the rest of Asia is a little somber, the SGX is still pointing towards a green opening, though of course it's not at the highest point of the day. Before we get down to talking stocks, there is some news that's coming in. Some inputs that Lata actually is picking up. Lata, this relates to NBFCs. Is there more regulatory action on the way?
Yes, it relates more to NBFCs. You are absolutely right. There was a lot of talk yesterday about this 3 lakh crore of fund for MSMEs. But what I'm picking up, and this is from top banking sources, that the government is looking at setting up an SPV where they will provide the equity and Reserve Bank will subscribe to the bonds. Something like this was attempted in 2009. So how do you, basically this is how you create that entity which will give out money. The second LTRO, as the governor said in his interview to Kujansis yesterday, gave one message very clearly. Banks are not willing to lend below a certain level. Their risk appetite is not for people below whatever, AA minus and thereabouts. So some fund has to be created for them. And that's why this SPV, whose bonds RBI is expected to subscribe to, will provide the credit for lower down NBFCs and MFIs. It is possible that the same entity will also be used for the MSME rather than create two lines of credit. It's the same entity. Now, where it will be housed is a matter of discussion. Do you want to create an altogether new entity, in which case staffing will take a long time? Or do you want to house it in, there is a CGTMS, which is a Credit Guarantee Trust Fund housed in the Department of Financial Services. That could be in the nodal agency, it could be SIDBI, it could be like SBI Caps was doing an entity for real estate. There are a lot of disagreement between finance ministry officials, which apparently is the reason why it is getting delayed. Top banking sources said they were expecting it last week, and now they're expecting that it may be tied up along with May Day and announced this week. That is an expectation, but this is the design. It's likely to be an SPV where government provides equity and RBI will lever it up by subscribing to the bonds.
Okay, that would be quite an interesting structure perhaps. Thanks for getting us some of those details. It's been all about how to push the money down the pipe, down the credit curve as well, to lower rated entities, of course. So let's watch out for that. Let's now get to our stock list. Our entire team is standing by with today's list of top stocks to watch out for. Anuj, let me come to you first. What's on your list today?
I know today we'll talk about IndusInd and Reliance, but for me, the two stocks that really would define the bank nifty are the corporate banks, Axis Bank and ICICI Bank. Axis, of course, comes out with numbers today. What was interesting is that both these stocks, when they had that decline 2 days back, took support at the 20-day moving average and moved on. So in that sense, that point that I'm talking about, if the bank nifty has to break out above yesterday's high, I think the heavy lifting has to be done by these two stocks. Yes, HDFC Bank is the highest component or has the highest weight in the bank nifty, but really the mojo is with the Axis and ICICI Bank. So I'll want to see any kind of follow through buying in both of these.
Okay. All right. Well, with that, let's go to the most important stock, Reliance. Sonia, rights issue, what do we know so far?
Well, the board meeting will take place on the 30th. They will discuss the results as well as the possibility of a rights issue. Now, they will also recommend dividend on equity shares of the company. Remember, this is the first rights issue in the last 3 decades by Reliance Industries. The last time Reliance Industries tapped the public for funds was way back in 1991 when it had issued convertible debentures. Those debentures were then converted into equity at 55 rupees a piece. Now, the current promoter stake stands at a little over 50%. The total total paid up capital is 630 crore shares. Reports indicate that the company is looking to raise about 55 to 60,000 crores through this exercise. The market view is that this is a show of strength and confidence of the promoters. The aim of the company is to become debt-free by March 2021, and this is a step in that direction. The whole exercise will also strengthen the case of prospective investors bringing in additional capital into the company. Apart from that, they will also be talking about their results. This quarter around, we are expecting the core oil and gas business to be under pressure because the demand for transportation fuel slumped during COVID. However, retail and telecom businesses could do well given increased consumption during the COVID outbreak. Back to you.
Okay, all right, Sonia, thank you very much for that. In fact, we'll be discussing, of course, Reliance and this big rights issue with lots of our guests in just a bit on the show. But let's continue with the stock list and go across to Abhishek on IndusInd Bank. Abhishek, at least there's no shocker or howler this quarter, right?
Well, Surbi, it's a mixed set of numbers coming in from IndusInd Bank. There was a sharp decline in cost of funds, which actually aided the NII growth being more than 44%. So therefore, the net interest margin was at all-time high of 4.25%. They also mentioned in the con call, they are seeing deposit traction from the retail, government as well as corporate portfolio. In the month of April alone, they have garnered 6,000 crore from corporate deposits alone. However, on the flip side, slippages continue to remain elevated. It came in at close to 2,060 crore when compared to 1,945 crore in the previous quarter. As a result, the gross NPA in absolute value increased by 12.5%, while as a ratio, gross NPA ratio was at 2.45 when compared to 2.18 in the previous quarter. Back to you.
Okay, Abhishek, thanks a lot for that. I like the way Surbi put it. At least it's not a howler. That's what you have come to expect from IndusInd over the last couple of quarters. But let us see. It ended at the highest point yesterday. It was up quite a bit yesterday. So we'll have to see how much follow through is there after a gap up. Nigel, what about Ambuja Cement?
Ambuja Cements was a good beat. It was a solid set of numbers. Well, in terms of the revenue, it was more or less in line. The margins, that looked much better than what we were working with. If you're looking for a chink in the armor, well, that had to be the volumes. Was that missed our estimates by close to around 2% odd. But what looked very, very good was the margins. And that's because realization jumped up by close to around 7%. They delivered a growth in terms of the premium product segment. So that was another positive. And also pet coke prices have come in lower. So all those factors put together, led the numbers to deliver a big beat. In terms of the EBITDA per ton, it came in at more than 1,000 rupees, and that was much better than what the street was working with. Most brokerages, they cite that valuations are attractive, and in fact, that's why they're more or less positive on the stock from here. Stock opens up in the green. Back to you all.
Okay, thanks for that, Nigel. And with that, we have HDFC Life results as well. They didn't look as good as I guess I say Pru. Did it, Abhishek?
Well, Lata, the results, if adjusted for COVID-19 impact, is almost in line with expectations. So the VNB of value of new business, if you adjust for the impact of COVID-19, is in line with expectation. However, the margins fell a bit to 24.3 when compared to 25.6 on a YY basis. Their capital ratio, which is the solvency ratio, dipped a bit to 184% when compared to 188% in the previous year. But it is above the 150% mandatory requirement. So the board has taken an approval of raising funds via debt of about 600 crores to maintain the solvency ratio. They also have given a cautious outlook wherein they say even if Q1 is flat on a YOY basis, it will be a good outcome. Back to you.
All right, Abhishek, thanks a lot for that update. Anisha, what about Adani Power?
Well, Anuj, Adani Power continues to disappoint. The revenue this time was down about 8% because the PLF came in at 66% as compared to 80% last year on account of lower demand. The EBITDA margins also nosedived and came in at 3% versus 9% last year. And look at the net loss, a quarterly net loss of 1,300 crores as compared to a profit of 635 crore last year. Yes, there's a one-time provision of around 200 crores, but even then the performance is weak. Even if you look at the balance sheet, the net debt has gone up due to acquisitions. So I'm expecting probably a red tick today.
Okay, so Adani Power, a little bit of red. Thank you, Anisha, very much for that. Let's move away from numbers and earnings for a bit. There's talk of a deal brewing once again within Max Life, the life insurance business, and Axis Bank. Nimesh has the details for us. Nimesh, good morning.
Hi, morning, Survey. So Max Financial is a stock to watch out for because they own a majority in Max Life. And there are now media reports suggesting that Axis Bank is close to buying 30% stake in Max Life for 1,600 crores. The report do mention that the deal is going to happen at the book value, and Axis Bank will have 3 to 4 nominees on the board of Max Life post the deal. Now, remember, we did the deal. We also even CNBC reported this deal a couple of months back. That Axis Bank is indeed looking to buy 30% stake in Max Life. No official communication or no official confirmation yet. But do remember, Axis Bank come out with results today, and there is a street expectation that along with the results, this deal may be get announced. So Max Financial is a stock to watch in today's trade.
Okay. All right. Got that, Nimesh. We have a lot to discuss. What does this mean for Axis, this 30% stake, if it goes through? Just to point out, we have written to both Axis and Max. We have yet to get replies from them. Of course, there's also the big Reliance deal to discuss. We'll do one thing. We'll take a break and we will have Mr. S.P. Tulsian joining us to discuss some of these stocks.